Hey everyone, a couple of months ago I did a fundamental analysis on Army Organics, and post Q2 result there has been a healthy 15-20% correction in the share price. So in this video I would help you understand the reason behind the correction in the share price, and will also discuss the expectation from the company in the near term. By the way, just a disclaimer, this video is only for educational purpose. Please do your own research before investing your money. This is not a buy or sell call. So what I've done is I've divided this video in three parts. In the first part, we are going to cover the IPO details, since the IPO has happened just a couple of years ago, and we'll also look at the share price journey so far. In the second part, we'll look at the business model of the company, just to briefly help you understand what is the business of the company, how it earns money, and what is the moat of the business. And the third part will cover the con call update from management and the future guidance. Before that, just to let you know that I also have a weekly series on my website. So I've got a few courses where there's this weekly series where I discuss the latest events in the economy, the macro events, what basically impact the stock market, as well as my own investment strategy. So idea is that a lot of people don't get too much time to do the research, and that's where I'm trying to add value. So basically, if you are a long-term serious investor, there's this exclusive community that you might want to explore. With this, now let's get started. First of all, let's have a look at the IPO detail and share price journey. So Army Organics had its IPO in September 21. Okay, so it's been 2 years. The IPO price was around 610 rupee, and it was a 569 crore IPO, fresh issue of 200 crore, and offer for sale of 369 crore. So what happened is, post the IPO, basically company got a brilliant response, and company debuted at 49% premium to IPO price at around 900,000 rupee. And then what happened is, in no time, its share price zoomed to levels of around 1200 by September 21, right? But since then, there has been a healthy correction in the share price. In fact, the share price fell down 35%, touched the lows of around 847. However, from those lows in March, there has been a healthy recovery. More than 50% recovery. Share touched high of around 1400, but again it fell down to current levels of around 1100. So from the peak, there is around 15-20% kind of correction, right? So net, if you look at it, there has been no return by the company post its IPO, right, in a couple of years. The question is it an opportunity, or there is some fundamental problem in the company? So let me just help you understand why there is a good rally in the share price from levels of 800 to nearly 1400. So this is the commentary of management by post Q1 number. Okay, and the commentary was very bullish. Management was very confident of the growth. They said that especially there's this electrolyte business that they are launching, and basically this electrolyte would find usage in the lithium ion battery, and that has got immense market. All the electric cars and everywhere, the lithium ion battery would have a lot of usage. So this is looking very, very promising, and management said that they are about to close some of the contracts, and the size of these contracts that we are discussing is much larger than what we had anticipated, right? And another point, they said that despite the challenging external environment, we are confident of delivering strong growth with robust margin during the year. So numbers were very good. It was up 8.7% year on year. PAT was up 12%, and the commentary was also very bullish. And because of that, the share price also rallied. But then what happened? In Q2, the revenues went up by 17%. However, the margins, EBITDA fell down by 12%, and the PAT, profit after tax, fell down by 23%. The question is, when management was so bullish, what went wrong? So one of the reasons why there's a correction of around 15-20% is because A, the results are not up to the expectation, and second is the management commentary. So what management is guided now is that they have modified the growth target from earlier 22 to 25% for full year FY24 to now at 18 to 22%. So basically, they have cut their guidance by 3-4% for the revenue. Like I said, there is a correction of 15-20%. The two reasons is, one is your weak Q2 number, and the second reason is because of reduction in the growth guidance. Now the question is, what really went wrong? Why management has reduced their guidance? Why Q2 numbers are not that great? And what can be the expectation for the near term? So I'll come to that. But before that, I just want to quickly help you understand the business. What is the business of the company, right? So Ami Organics is a research and development driven manufacturer of specialty chemical that find usage in two sectors. One is your pharma intermediate and another is your specialty chemical. Pharma intermediate is the advanced intermediate has got maximum share of its business at 84%, okay, and specialty chemical has got around 16% share, right? If you look at other aspects, company in FY23 did a revenue of 6,200 million rupee, which is around 621 crore, PAT of 833 million, which is 83 crore rupees, and company has got around 520 plus product. And in FY23 itself, they've launched 70 new products. So company is consistently launching new product and has got a very diversified product set. Also, if you look at the customer, it's got more than 500 customers and they've added 60 new customers in FY23 and has got presence in around 50 countries, right? That speaks a lot about it. And if you look at the export of the company, out of total revenue, 59% of the revenue has come from export in FY23. Okay, has got 3 manufacturing facility, 1 R&D facility. Now just to briefly help you understand what is the difference between your active intermediate for our pharma and your specialty chemical. So in pharma, you can see there are around 185 plus products that find usage in 17 therapeutic areas. And around 90% of them are focused on chronic therapeutic area. And the important part is company is majorly backward integrated to basic chemical. So that again helps them get a better margin. And the important part is around company's key molecules have around 50 to 90% global market share. So Ami Organics is the leader in the business it operates, especially in this active pharma intermediate. If you look at the specialty chemical, company manufactures the niche KSM. KSM is your key starting material for agrochemical and fine chemical companies. Some of the names you can see, and then the usage is in cosmetics, dyes, polymers, animal food, personal care industry. And the interesting part is this, the new segment, which is the electrolyte. We'll discuss more about it, and that will find usage in the manufacturing cell for energy storage device. So I hope you got a fair understanding. Just to help you a bit more, company has got presence all over the world. Look at the way company's revenues from export have increased from 46% to 50 to 58, now 59%. And the key export destination include your Italy, that has got 34% stake, then Finland, Spain, Israel, China, Germany, so all over the world. And some more data, 58% of revenue from top 10 customers, 13 customers associated since last 10 years. And apart from that, if you look at some of the key clients of the company, in advanced pharma, within that, if you look at the generic segment, it includes Cipla, Aurobindo, then Midas, then Dr. Reddy, then Lupin, Sun Pharma, Zydus, Lotus Lab. Then if you look at some of the innovators, it includes Bayer, then Fermion, Boehringer Ingelheim. So a lot of, it includes both generic and innovator. If you look at specialty chemical segment, it includes clients like Himalaya, Bayer, then Reliance, Huntsman, then some Arabic company, then your Sharon and LBB Specialties, right? So I hope you got a good sense of who all are the clients of the company. Just to help you understand the business model for pharma intermediates, basically around 1 to 3% business comes from import substitute, where it supply import to domestic pharma companies. Then around 5% comes from CDMO, which is contract manufacturing, where they have exclusive long-term supply contracts. Around 40-45% come from regulatory market business, and around 50-55% comes from emerging market business. And then the important slide here is what makes them different. What is the moat of the company? So first of all, company has got a niche product portfolio with a strong market share. Again, this is very important. So they have got very limited competition in the business that they operate, and some of their key products hold more than 50% market share in the world, right? That's what make Ami Organic different from other companies, because it's a leader in the business it's operate. Then another interesting part is the high entry barrier, because it's not easy to enter into the business they do. There's a long gestation period, then it involves complex chemistry, and of course there's a lot of regulatory requirement. Apart from this, they've got a very diversified product portfolio, they've got a diversified customer base, they've got a reputation of innovation supported by their R&D, and of course, they've got a robust cost management system. So all in all, it looks like company has got a very thick moat where it's the leader in the sector. There are strong entry barriers and it's got a very diversified customer base and the product base. All in all, the moat is looking strong. Just a final slide on the strategy. If you look at it, company has been a growing innovator business because of track record of innovation, timely supply and consistent quality. Products already commercialized for drugs going off patent in coming year, that expands, open up new market, right? So company is coming up with a lot of new products and continue to develop innovative product for global market. If you look at the outlook, company has done a capex of 190 crore to expand its capacity for advanced intermediate business at its Ankleshwar facility. And another interesting part is it expects to continue the historical growth rate in the coming years. I hope you got a good sense. Finally, if you look at the electrolyte business that I was talking about, basically company has developed a couple of products, which is one liquid electrolyte additive to increase electric capacity of lithium battery and one for solid battery, right? And the interesting part is it has successfully developed a core electrolyte additive for sale used in energy storage, and it's the first Indian and global company outside China to develop this product, right? So that speaks everything about the prospect of the company. And again, its sample has been approved at plant scale from 6 customers. So good progress. You can see some industry analysis like there are strong entry barriers, not really any substitute for that. Competition is also limited because there are only 7-8 players in the market and all are from China, right? Finally, there's a good new acquisition done by the company for company name is Baba Fine Chemical. They acquired it on 1st April 23. So there is also a growth prospect coming up from this inorganic growth, right? And if you look at the financials of the company quickly, company has been growing at a very good rate. Look at this. In March 17, the sales were 160, then jumped to 188, 239, 240, 311, 520. So consistent growth, 617, 665. So every year company has grown, and almost if you look at in 6 years, company's revenues have grown almost 4 times. And if you look at the margins also, it increased from 14 to 16, 18. There was a slight dip, but then increased to 24. Of course, this was an exception because of COVID. But then again, since last 2-3 years, margins are sort of consistent at around 20%. And if you look at the net profit, it has increased from 12 to 18, 23, 27, 54, 72, 83. And of course, trailing 12 months, there's a fall. But net, if you look at it, consistently, the profits have also grown at a very good rate. So profits have almost grown around 6 times in last 6 years, right? So profit growth, revenue growth is pretty good at a consistent level. Profitability is also good, ROC of 20.6, and if you look at ROE of 15%, if you look at the leverage structure, debt to equity is just 0.16. Company has got a very small market cap of around 4,000 crore. So it's a small cap company, commands a P of around 53. We'll come to the valuation part. But net, even if you look at the cash flow also, it's positive in cash except for March 22. Net, the cash is also generating. And shareholding, if you look at it, companies FIs have shown good interest where they've increased their stake from around 1.8% to around 5, 6, and now it's 7%. Even DIs, if you look at it, have increased their stake from 3.6 to 5 and now 5.95 in couple of quarter. And public holding has reduced in the company. Promoters are currently holding around 38.9% stake. So net, the financials are also looking solid. Now let's come back to the final part, which is the Q2 con call update and future guidance. So this is a very interesting slide on Q2. First of all, in Q2, companies export stood at 54% and domestic business stood at 46%. So export has slightly reduced and domestic business has increased. If you look at the update on active pharma intermediate on the Fermion contract, so this is a very important contract by Fermion. They've signed a new contract for additional advanced intermediate, taking total product under CDMO contract to 3 products. And they're on track to start the production from Q4 of FY24. So currently it's Q3. They will start from Q4 from their Ankleshwar unit. Coming back to the update on specialty chemical, they've received order for a UV absorber product used in paint industry. Expect to start production from Q3 of FY24, which is the current quarter. On electrolyte additive, company saying that they are in advanced stages of negotiation of contract with couple of customers. I think that this news, once they announce the final deal, I think that is going to have a good impact, a positive impact on the share price. So I'm sure a lot of people are waiting for the update on electrolyte additive. Now, if you look at the capex update, basically company has invested around 190 crore in Ankleshwar unit. It is ongoing investment, and the block one of that particular phase is ready and basically on track to commence the production activity in Q4 of FY24. And final update is on Baba Fine Chemical. They have completed the acquisition, and hopefully we'll see more update on this aspect as well. Coming back to the con calls now. So basically, what was the reason why the revenue has not grown that much and why there's a fall in EBITDA and PAT year on year? So first of all, the biggest reason is that there remains a consistent oversupply from China across the chemical value chain. Now, I'm sure if you are following chemical sector, you would be hearing this news that there's a lot of dumping happening from Chinese companies, and Ami Organics is also getting impacted because of that. So what has happened is this has led to decline in raw material cost, exerting downward pressure on the pricing of the finished good across the industry, right? Even as things seems to be improving, Chinese competition continue to outpace demand, right? And this is one of the biggest reason why the entire chemical sector in India is struggling. Another important point is that they've said that there's not much of a great impact of Chinese competition. But the problem is that our product competitor got cheaper raw material and they have quoted at a very low price to the customer, and because of that they also had to reduce their price, and that resulted in fall in revenue growth. I hope you got a good sense of why the revenues have fallen as compared to 20-25% growth, why they are at 17%. Another important aspect is on the margin front, where they said that in terms of margin, because of higher sale of lower margin product and the persisting pricing pressure throughout the quarter impacted their margins. Obviously, when the prices fall, obviously it will impact the margins. So that is the reason. And another reason has been that the higher employee cost due to annual increment, ESOP cost, and hiring of employee for their newly built Ankleshwar factory. So all of these factors impacted the EBITDA of the company. Alright. Then this particular slide where they mentioned that we were able to deliver 8% growth year on year for the advanced pharma, but the launch of one of the key product has been delayed by our customer, and that has also impacted their quarterly growth. So net, I hope you got a good sense. One of the reason is because of the dumping from chemical Chinese companies, and that resulted in fall in the revenue. And another reason is the employee cost, and of course because of low margin their EBITDA also got impacted. And the third reason is one of the key product got delayed, and that has also resulted in slower growth. Now, there was a very interesting question where they said that did you lose market share by any chance in some of the product? So they said that we have not lost any market share. If we lose the market share, then we would not be growing. To avoid losing market share, we compromised on top line, and this is how we maintain the market share. The volume is already there. Only to remain the market leader, we have to compromise on top line. Right? So this is an important update. You might wonder why they have to reduce the price. It's because they wanted to remain market leader, and because of that, they've compromised their top line. And that is the reason why the raw material price you see is a little bit higher. Next important update is that they said that I would like to highlight that impact was particularly for this quarter because their gross margins were lower, and we'll see our margins going back to previous level from Q3 onward as raw material prices have now stabilized. So this is a very important update from management, important guidance where they're saying that from Q2 onwards, they're expecting to go back to their previous margins, right? So that is a positive sign. Next, there was a question that, the margin recovery was, so basically their gross margins were around 48%. So would this growth be a gradual one over the next couple of years, or would it be a one time? So what they are saying is it will drastically go to 48% in the next couple of quarters. So again, positive news. Then a couple of update on the capex side where they've said that they have done around 104 crores of capex, and another 100 to 110 crore will be coming by year end. And another question was on the electrolyte business, and they said that we are in a good position. In this quarter we'll begin our production. We have already placed an order for raw material and we are looking for supply starting from Q4. Once we start a production, we'll announce the supply. All the audits and everything is finished by the customer, and now we have got the green light to go ahead for the production. So again, an important update on electrolyte. Another question was on the Baba Fine Chemical integration because of the recent acquisition that they have done. So they have given a long-term guidance of around 200 crore. So the question was around that. And they said that this year has been the year of consolidation and integration. And if you look at it, they said that, but from next year, it will be ramped up very exponentially, right? So I hope you got a good sense of update. Final question I want to address is, there was a question on the revenue growth. So earlier, the revenue growth was around 25% expectation, and now it is around 20%. So what is the reason? So what they are saying is, at the end of the day, your revenue growth is based on the top line, and this is where the price is eroded on the sales side. That is the reason why this target is revised, right? So I hope you got a good sense. The important aspect is, they said that our volume will definitely grow at 20 to 25%. So the impact is not on the volume, the impact is only on the revenue side because of fall in price. Again, that's a positive sign, right? Because the value of sale is eroded. And that is the reason why they have revised the number. So if I quickly conclude, so basically the reason for weak Q2 performance is because of fall in prices due to Chinese competition that impacted the top line. Another reason is because of higher mix of lower margin product plus increase in employee costs, as they have also done hiring for their new unit in Ankleshwar. And all these factors impacted the margin. And finally, there was a launch of one key product that got delayed, that also impacted the growth. The important aspect is what you can expect from the future. So if you look at the guidance, margins are expected to go back to previous quarter from Q3, which is very, very positive sign. Delayed the key product launch would be launched in your Q4 of FY24 or Q1 of FY25. Baba Fine Chemical integration in process, post acquisition, expecting exponential growth in coming years. Their Ankleshwar Unit 1 block would be operationalized in Q4 of FY24 and remaining 2 by end of Q4 of FY24. And volume growth expected around 20-25%. They have compromised top line to avoid losing market share. And finally, on electrolyte business, they said order placed for raw materials, supply to start from Q4, advanced stage of negotiation with couple of customer. So all in all, the guidance from management has been very, very positive. And if you look at it, the correction actually created an opportunity from nearly 1400 levels. Currently, the share price is at around 1100. And I think that after this positive commentary, I think it can be considered to accumulate. So this correction can be an opportunity. Having said this, like I said, it is not a buy or sell call. You got to do your own research. The valuation will always be on higher side because a company is a very small market cap. It's growing at a fast rate. The guidance is also very positive, and it has got a leadership in the global market on some of the key molecules it manufacture. So net, I think the overall everything is looking positive on the company side. I'll keep a close eye on the update in Q3, Q4, and I'll let you know. But yeah, this is it for this video. If you have any question, if you want me to cover any company, just let me know in the comment. And if you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.